Good afternoon, traders and investors. Todd Gordon here, Inside Edge Capital. Happy Friday afternoon. Just taking it outside. It's like it's September 19th in upstate New York here in Saratoga, and it's just absolutely gorgeous. Blue sky, sun somewhere over there is the kids' baseball net. So just wanted to do a video. I mean, I've talked about this before, but I just want to take a couple minutes and address the people who have worked with us in my former life, which is over at TradingAnalysis.com, which was the research, membership, trade alert, community business. And that was, we recently sunsetted that business while we were simultaneously running the wealth management business Inside Edge Capital. There was a good 3.5 year overlap between the two businesses, and just about 3 months ago we shut TradingAnalysis down to focus on the wealth management. And this video is going to be talking to the people who know us from that former life. Those of you who are just finding this video or new, no idea who the heck we are, this video probably isn't very useful or helpful for you. But I've made quite a evolution in my trading and investing career, which is nothing new. I mean, right out of college, even before I left college, I was short-term trading the stock market on my E-Trade account through my college network, and I was 21, and now I guess I'm 46. So there's nothing new in terms of evolving. But specifically to the old people who know me, for a long time I focused a lot on chart analysis and specifically the Elliott Wave theory, and I've really tried to get away from it publicly. It's a long discussion, one that I'd like to have with you guys in a public forum where we can interact and you guys can throw questions in and comments and pushback, and it'd be great. I'd love to engage on it. But it's something that I've talked about, and it's something that again is consistent in the evolution of a trader and investor, which I think once you get complacent in the markets, you're gonna get beat up. The markets are constantly evolving, and I am going to try to explain why I'm trying to evolve beyond Elliott Wave, specifically in this AI-driven runaway bull market. Elliott Wave, and I'll show you in this video, I'm going to show you where I think the wave count is. I'm going to do that with hesitation, because the point that I want to make right now is it's inherently a counter trend system. Okay, it's a counter trend approach of looking at the market, which I think does investors and traders of all levels a massive disservice, particularly a disservice to the newer investor and trader, and it has no reflection or it's no indication of your intelligence as a person. Running wealth management business, I'm intimately getting to know our investors and our clients. Like, some of the smartest peoples in the sciences and mathematics are some of the worst traders and investors. It's no reflection on your intelligence. But as I've gotten away from Elliott Wave, I've had people that I trust and that I'm friends with, I've worked with over the years, reach out to me and are constantly trying to give me the wave count, and the market, which the wave count that they're showing me is like, oh, this is going to be the top. This is going to be the top. And it just inevitably just keeps going higher as we close on the highs. We have 9 minutes to go here on Friday, the 19th of September. And one of the things that I've found in the Elliott Wave community is the idea of fractal. It's not a word, but I like to use it. The fracticality of the Elliott Wave principle. So again, what I'm going to show you is I'm going to show you the wave count that I'm looking at in the Nasdaq. I'm going to do so with hesitation. I'm going to show you a position that we just put on MP Materials, which is, I think, incredibly interesting story. It's got a good chart pattern, really good fundamentals, and it ties in very well to the new age, as Jensen Huang says, the new digital revolution, the fourth industrial revolution, and it's quite an amazing rare earth mineral story. As they're mining for a group of minerals that go into magnets, which are a key component of some of the technologies that are leading this. But so there's a few things I want to go over. the back to the index and the Elliott Wave count, new people pull out wave counting software, they pull out their labels, and they're constantly they're looking for the end of the 5-wave move. So I'm not going to go into the wave count just yet. I want to have a discussion about this. But so they'll look at a chart and they'll say, here, let me just pull this over. They'll say, oh, let me start counting the 5-wave move. 1, 2, 3, 4. Okay, I can see it. I'm going to get out of my trade, get out of my trade, get out of my trade, but yet it keeps going higher. Okay, so inherently what it does is it makes or encourages traders, particularly new ones, to be counter trend. And that is just not good in general, to be a counter trend trader. And then particularly in this market where the Fed just cut rates, there's indications they're going to go another 2 cuts. They have to cut rates into a pretty solid economy. Yeah, the labor market is lagging a bit here, but we have a pretty explosive macro and fundamental backdrop combined with the AI build out, and it just, this massive leaps and bounds that that they're putting in front of us in terms of compute power, how it's changing multiple industries. This is a dangerous market to live in, to be counter trend. And I look back and I love these 2 books, right? They're wonderful reads. They're great history of the market. And I think the big takeaway that I have noticed in the current day application of Elliott Wave theory is modern day practitioners who are world renowned. I mean, I hate to say I'll put myself, in that category. I've done it for a long time on Wall Street and hedge funds, and I've worked with the best in the world at it. But I think when you look at the application with Bolton and AJ Frost, Robert Ray, the guys who, and Charles Collins, like, they would use fractality. They would embrace the fractal nature of Elliott Wave a lot more, which means rather than just try to go count a 5-wave move and say this is probably the end of the move, they would embrace the idea that instead of it being 1, 2, 3, 4, 5, it could be 1, 2, 1, 2, 1, 2, and we're about to rip significantly higher. And what's interesting, like a MP Materials, which we'll talk about, or any of the nuclear stocks or the quantum stocks, like the history is so short in those stocks, you don't know if it's 1, 2, 3, 4, 5, and then the market's going to sell off, or if it's 1, 2, 1, 2, 1, 2. And the other thing is, why should you start a count? Okay, let's. I'm going to go off script a little bit. Let me go over to this. Why should you start a count just because a stock goes public? Okay, let me just flip over. Let me throw QBTS, D-Wave Quantum. Okay, why should... Let me pull over the daily chart here, or the monthly. Okay, so, the stock opens up at 12 back here in late 22, sells off in 23. So I could see the new guy saying 1, 2, 3, 4, 5, and sell it, get out. Well, one, what was the count, or what was the value of the company? Of course, they don't have any revenue yet, or no earnings yet, just revenue and IP. But what was the value of the company when it was a privately traded company? That needs to factor into the count. So let's say you had value down here at 20 cents or 10 cents when the company was first founded in a garage somewhere. And I don't know the background of QBTS, which is D-Wave Quantum, but why couldn't it be 1 in the private markets down in 2? This is 1, 2. This is 1, 2. And then we're starting to get 3, 4, 3, 4. But the fact is the higher operative count is 1, 2. And we could be going from less than $1 down here in small degree 1, 2 up to $50, $100, $150 once this company starts to make some earnings, right? So there's too many companies who are in this new age digital revolution who are redefining the way all kinds of sectors and industries and companies operate that have too short of a time frame. And it's just dangerous when new traders come in and say, oh, that's 5 up, I got to get out of this thing, when you're missing the big picture. So I'm not saying I'm abandoning Elliott Wave, and I've jokingly said on social, like, I'm going in the closet with it. I'm always going to do it. It's going to be part of my arsenal probably forever. But do I want to go out and lead with it? And do I want to teach new investors how to do it? No, I don't. I haven't wanted to do it for years. It's something that you have to know how, when, where, why to deploy. It's something you need to use selectively. Okay, it's a very powerful tool. And what we're really doing is we're looking at the patterns in the shape of trend waves, the shape of corrective waves to gauge the psychology that's driving whatever market you're studying, and that's important. But again, too many people use it for what I call evil, which is counting a 5-wave move and saying get out, which is a massive disservice because with running money... What's up, buddy?
Reminder of Eden.
Oh, thank you. What time is she?
Like 4:05.
You're the best. Will you...
I'll go out.
You'll go out?
Yeah. Where's the stop?
Brody, you're the best. Mom is on a mom's vacation in Florida with 3 of our friends' families. They're on the beach somewhere, probably happy hour started a while. Brody, come down here.
Yeah.
Brody just got 100 on his math test. I'm so proud of you.
Yeah.
Proud of you, buddy.
Thank you.
What were you doing in your math test?
We were doing like greatest common factors.
And least common factors?
No, we did that today.
Oh, good job.
Yeah.
Proud of you. And he reminded me that we got to go get Eden because Mom usually gets her off the bus.
Yeah.
And the bus driver needs us there. All right, I'm going to keep going for a little bit. And then
All right, I'll pick her up. I'll do it.
I'm going to pause and then we'll do it. Thanks, bro.
Okay.
Good
bye.
job.
Or
Proud of
I
you.
could go out there.
Okay.
Because as long as someone's there.
All right, will you do that for me?
Yeah.
All right,
I'll
thanks.
go out and wait.
Too many newer investors in this explosive AI-driven economy are getting out of positions too soon and robbing themselves of returns. That's where I was going with this, in that getting inside of investor accounts and getting to know them, some of the smartest people overthink this and use a methodology like this that, you know, is pretty granular. You know, it's pretty heady. And they leave themselves out of the markets overthinking, waiting, you know, for the next drop to buy in sooner or buy in lower, and they miss the opportunity, costing them hundreds of % return in this kind of market. So that's why I'm going down this path. So let me just look at the market real quick. There's nothing quick about this. So here is the Nasdaq. Now, I can't stress enough how hesitant I am to put this in front of you. I'm going to look at the wave count in the Nasdaq since Q1 of 25 here, just this little bit. That's the other thing that newer traders, investors fail to get proficient at, is using multiple time frames. Okay, people want to fall in love with this short little 5-wave move that I'm going to propose to you on the daily, but you need to keep in mind that that little 5-wave move that I'm going to propose to you is just this little guy in the context of the move up here from 2000, and that's the bottom of 20. Here we go, up in 1. This is the 2022 sell-off. So, you know, even if we do a fib extension of the COVID to 2022 move down to 2022, like, this is key. For those of you who know Elliott Wave, again, we're not even 100% of the COVID low to 2022 inflation interest rate spike. We're not even 100%. That's at 634. And let me make these a better color, something a little louder. Okay, the 1618, which is typical, that's all the way up at 1,115 in the Nasdaq. Like, so you got to keep that in mind. Yeah, we can fall in love and really nail this little 5-wave move on the move down from April of 25 to now it's September, but the bigger picture count that's going on, we're not even to 634 yet, which, what are we? Did we close at 600? Did we get 600 today? Really close. Whatever. 600, 634, $30. So it's going to be 5% higher here to the minimum wave 1 target coming from COVID. And then the 1618 is, I can't calculate that, 80, 70% higher from here. So it's that ability to separate the time frames on, you know, the wave counts in different time frames, and keep in mind, what are we reaching for longer term? It's, you know, it's the 1618 up at 1100 in the Qs, which, I don't know, 3, 5 years, 7 years from now, I don't know. All right, so let's go back in the near term. All right, so with all that being said, so, you know, if we do a 5-wave move up here, and I could see that. And I could also look at this as 1, 2, all of 3. This could be a little triangle. If you do like this, A, B, C, D, E, fine. And then we have one more move up. Okay, a couple fib targets. You know, if we do a 1272 extension of the Q1 drop, 1272 was right here at 586. There's a rule that I would teach in the Fib and Elliott Wave classes. If the 786 is broken, which it gapped through, held as support, usually you're going to the 1272. The same thing just happened. We got to 1272 extension. We moved up. We used it as support. Market's like, here, hold my beer. Keep going. So the 1618 is at 650. Okay. So I'm just going to push that aside for clarity for now. Okay. So the 1618 is there. And you can see where my oval is going. All right. Now, we also want to do, I've got a distance of wave 1 connected to the end of 4. Oops. And that's going to be right here, I think. Yep. I'm a horrible dad. I hear her bus coming in. Brody's going to go get her, though. You know, let me redo this again. Okay. I'm just going to redo it. All right. So I'm going to go my fib. So I'm going to do distance in 1 up from the end of 4. Okay, there we go. Settings. I'm going to make that a little lighter. Boom. Okay, we're going to get rid of all that. 3. Keep it clean. 382. Okay, so the 618 of wave, ongoing wave 5 compared to 1 is at 614. The 100%, which is very typical, is at 650. Do you see what's happening here? The 1618 extension of the Q1 decline is right on top of the 100% projection of wave 1 V5. Now there's one more that I'll do. Let's do 1 and 3 up from 5. So 1, oops, no. I want to do this guy. 1 and 3 up from 5. Okay, pull that across. I'm going to pull the 0.382 in, and I'm going off the end of wave 4 here. Okay, so the 382 is there. Do you see the little clustering of fib that's coming in here? Okay, so 1, I'm going to do everything I can for the market to get up to the zone around 642 to 650. Okay, so we're closing right about 650. So 10% would be 60. So we're about 8% from that. So yeah, I see the possible 5-wave move. Yeah, I see the possible triangle, but we want to stay long to try to get up to that. Plus, don't forget what's going on with the COVID lows up to 2022. Like the 100% projection of that move was at what? 634, which were... Okay, thanks, buddy. 634, which is there. 634 gets us up to 650 on the daily. But keep in mind, longer term, this is what we're looking towards. Okay, so I think that may be what's going on the Qs. Okay, you know, and just a nice example. I mean, this video is way too long already. Okay. So MP Materials, all right, this is a great story. I just added it to the portfolio. This company, you should definitely check this out. Go to mpmaterials.com, go on about, watch this video. It's really, really well done.
Hence, the telephone and the motion picture camera.
Just listen to the first few minutes.
Nikola Tesla once said, 1,000 years hence, the telephone and the motion picture camera may be obsolete, but the principle of the rotating magnetic field will remain a vital, living thing for all time to come. These prescient words ring true today more than ever. Magnetics is synonymous with motion in modern life. It is the magnet inside the motor that makes your electric vehicle drive. It is the magnet inside the turbine that turns wind into energy. It is the magnet inside the drone that fuels its dance in the sky. It is the magnet inside the robot that precisely guides it across the assembly line, around a farm, or throughout your home. It is the magnet inside the MRI that creates the namesake magnetic field. And it is the magnet inside the mysterious and, in some cases, not yet developed defense technologies that keep us safe. It is the magnet inside that matters, and therefore, our lives increasingly rely on magnets and the special ingredients inside the most powerful and efficient magnets, rare earth materials.
Yep.
Without these vital resources, we will struggle to progress. Unchecked progress can have devastating consequences. Earth witnessed this with our era of fossil fuels and the internal.
So, back to this. This company went through, has been quite storied. I think they came out in the IPO in 2017, got crushed. I'll show you. But then we realized through COVID and specifically, a reminder that, one of the most important resources of a sovereign nation is its energy source, with what happened in Russia and Ukraine. The Department of Defense in the U.S. invested about $400 million in this company. Goldman and J.P. Morgan collectively put $1 billion behind them. And what they're doing is bringing this rare earth mineral field in Mountain Pass, California. It's on the Route 15 between Vegas and California. Brought them back online to now be 15% of the world's supply of rare earth minerals. China has the other 85%. So there's a huge interest to make this company work. So, what a great example of a company that, has a short history on the public markets, got absolutely crushed, and is now coming back in a big way because magnets, you heard it, Department of Defense and drones and electronic vehicles, like the uses are unbelievable, right? So if you look back at this chart, okay, let's pull this guy aside. Here's the IPO. Okay, same concept. It IPOs at $15 in 2021. It's come online, I think it was in 17, but what was the value of the company when it was a private company? It was way down here. Maybe this is 1, this is 2, and not falling in love with this little 5-wave move that I'll unfold for you here, which is really just from here to here. Keep the bigger picture trend in the back of your mind, which, private company back here, 1, 2. That could put this thing at $500 a share. Who knows? I don't know. Right? So don't fall in love. It's the same concept as I talked about earlier. Don't fall in love with, with the short-term count. Before we get into the technicals too, why is that not working? Okay. All right. So if we look at where this company was in last year, they did collectively for the year, they did $253 million in revenue in 2023. 2024, they did $203 million. This year, they're looking to do $282, which is incredibly small. But look at the growth expected in 2026, up to $706 million, which is 150% top line growth. Earnings from a loss of 57 cents last year, loss of 49 cents this year, to 70 cents next year for a 243% EPS growth rate. That's bonkers. Look at the earnings over the next 2 quarters. This quarter, they were expected to lose 22 cents. They lost 19. So surprise. And then surprise on earnings. They were supposed to make 42 million. They made 57 million, which is a 36% surprise. Unbelievable. And then not expecting much this quarter. But then look at the 53 million in earnings going to 115 to 149, 89%, 146. That's the kind of growth that you want to try to trade. And this is a good example of the fundamentals meeting the technicals. Now, again, same thing. A little 5-wave move should jump out to you. We did scoop MP right about in here. I wrote a CNBC Pro article about it. I added it to our growth portfolio at Inside Edge and on the rebalance this week. So on the short-term trading basis, we can do a simple little wave count. There's 1, 2, 3, a nice ABC correction down into the 50-day moving average for 4, and then a little bit of a push up in 5. Okay, so how far could this guy go? Well, you just pull out your fib tools. Pretty simple. Let's just do wave 1 compared to 4. Okay, so the 618 is going to be at 90, just below 100. Let me pull the 100%. There we go. 100% at 131. The 61% is at 98. I then want to do a waves 1 through 3, pretty standard. 1 through 3. And we just look for a little bit of agreement. And there's not too much in there. You know, I would say you might have a little bit of attraction here. Oh, pun intended with magnets. 98 to 109, and then there's a wider zone, higher, 131 to 156. So it depends on what your the trading account that you're using. What are the purposes? What's this account meant to do? How does it fit into your overall plan? If you're trying to short-term trade your long-term money that's meant to service your family and your kids and their kids' kids, you have no business being in at 73 and out at 108. 30% is doing your future generation a disservice if you are missing the forest for the trees in that, you know, this could be a massive wave 1, this could be a massive wave 2, and you should hold this stock until it's at $500 or $1,000 a share. You don't know. So, you know, that's kind of the way I'm looking at this is, I guess it's a combination of the counter trend nature of Elliott, where people are so quick to count the end of a 5-wave move and say get out, number one, and number two, which is also taking them out of this massive AI build out, and number three is confusing time frames in the accounts you're trading and not having enough exposure for money that's meant to service you long term. Can't tell you how many accounts Kyle and I have looked at from smart people who are woefully underinvested, missing out on hundreds of % returns because they're overthinking it and losing themselves in the short-term time frame, and not keeping an eye on the bigger picture as to what's going on, and being able to stomach the volatility that's inherent in these massive markets, because they're overthinking and they're so nervous by the news. I mean, you know, I've been talking about this forever, but the frequency, the urgency, the horrible emotions that the news, both traditional and social, are designed with the headlines to stir you up and fire you up. They're doing you a disservice in your portfolios. So that's how I knew I was ready to manage money, when I could separate the short-term time frames. No, I have a trading account. That money's earmarked for short-term, and then longer-term money, set the emotions aside, have a bigger picture, which all goes into a financial plan, and that's why we have financial planning as well as active portfolio management. So I don't know. What's the real point of that? That's why I'm really trying to get away from Elliott Wave, because I just find that it's incredibly interesting. It's so fun. The history is amazing, but it's such a misunderstood, and it's a dangerous tool in the hands of people who just don't quite have the experience with it. So, you know, I think picking stocks like this with such short history in this AI evolution, momentum, guys, is your friend. It could be as simple as finding old resistance, buying a stock, buying it through the highs. Like, I'm going back to the IBD ways. Like, you know, I know an IBD. I used to live in LA when Bill O'Neill was at the later end of his career, and I mean, I was across town. I was working for a different trading organization, but I feel like, you know, finding the companies with the best fundamentals, the best earnings and revenues growth, breaking technicals after a consolidation, which you can use Elliott Wave to identify corrections and consolidations, which is great. But it's okay to buy highs. It's okay to buy momentum in here, because that's the kind of market we're in with AI, but also the Fed decreasing rates, trying to stabilize the employment market. But maybe employment is being displaced because technology is increasing operating efficiencies of so many companies, justifying these high multiples. And, you know, to think that we have a 5-wave move and you got to get out. No, dude, no. Like, it's time to put your foot on the gas pedal. And if not, you got to have the skills to get yourself, you know, out of a heavily long position to put protection on, which is what we do at the Wealth Management. So, all right. I think that's all I can handle, and probably you can handle if you made it this far. I appreciate it so much. Please write what you think. I'd love to know your thoughts on this, and help me, you know, shift or help me carve out discussions you'd like to have in the future, because it's incredibly important. So, all right, I'm gonna leave it there. See you guys. Take care. Have a great weekend.